getting a car loan, or doing about this, how do I line up my credit profile to attain the best score possible to achieve those?
All right, fantastic. Because you know what? I think if the next time you do one of those seminars, we need to post that on the shifteconomy.com, and we'll have to have you back on the show again to start promoting that. We need to do that as soon as possible because, I was looking for an opening to take a pot shot to the legal community, which I love to do, but most of the folks, that do bankruptcy law in the legal field don't understand anything about credit, I have found.
Yeah.
So they're good at getting the paperwork done, getting, debt discharge, but as far as how to have a life after bankruptcy, they have no clue.
Right.
At least that's been my experience.
Yep, definitely.
So, Neil, you were asking something about the process?
Well, yeah. How does it work? In other words, it sounds like basically you're requesting things, proof from the creditors, and they're kind of being tripped up either bureaucratically or legally to where they lose the right to post something on your credit report. Is that accurate? Or
yeah, let me just use a real quick analogy here. I kind of relate it to getting a traffic ticket. You know you're guilty. You're speeding on the way to work one day. You go to court. The cops there. Everybody's there to testify against you. You know you're guilty. The judge knows you're guilty. But because of a technicality, the way the cop wrote that ticket out, made a mistake on the ticket somehow, got the driver's license number backwards, anything, they have to throw it out. It can't be rewritten. They can't use it against you in a court of law. Use that same analogy on your credit report, okay? We're not challenging the fact, again, like I said earlier, that you're late on it or something like that, but was the reporting done properly? And if they didn't dot their I's and cross their T's, basically those things have to come off by law. And they have a 30-day business days, so about 40 days with weekends and so, to check with the creditors, make sure all the, like I said, T's have been crossed, I's have been dotted. And if they can't figure that out, then that has to be removed by law. And they can't go back on the report either.
And this is really what keeps the bureaus in line, these laws.
Yeah, it's a love-hate relationship. Let me put it that way. They don't like us.
They serve a purpose, but they need to be kept in check. Otherwise, they would run roughshod over people's
there's no
financial history.
Unfortunately, there's no credit police you can call to step in, or attorneys. You'd have to legally sue them if you really wanted to go down that road. So we just challenge them with the laws, and 9 times out of 10, they're going to look at that and say, hey, yeah, we need to take this off. It wasn't done properly.
Great.
And it sounds like a very affordable and economical way of handling the situation, too, for most people.
Yeah, we have a month-to-month program. No contracts, not locked into some 2-year agreement or something like that. So depends on whether someone's got a 30-day window to close escrow and buying a new home, getting a job like we were talking about earlier, or maybe they need something long-term because they want to buy a house a year from now.
Why don't you talk a little bit about that, if you don't mind expanding? What kind of issues have you run into with folks that are trying to buy a house and then all of a sudden they run into credit challenges because they need to have their credit score brought up to a certain level? This would be a perfect time to bring that up because actually our next guest is actually in the mortgage industry. Mm-hmm. So,
well, and that's my previous experience too. I was in a mortgage broker for a number of years, approximately 10 years ago, and started out that way. That's how I even started the whole credit restoration business, saw the need there. Pulling credit reports, seeing people that they couldn't qualify for a loan. A lot of the bank loan programs are based on your credit score or what's on there and how long it's been on there. So, through this whole mortgage collapse, obviously, and people just, walking away from their homes, now they're going to have a foreclosure on their records and so on and so forth. And obviously, if you do the breakdowns on the cost of a rate, even with the auto insurance like we're talking about or mortgage, it can cost you thousands and thousands of dollars on the mortgage. So I've seen people come into our program where they didn't qualify for a loan, or they had a home and they wanted to refinance. I did a loan for one guy one time, and we got his score jumped up considerably. He saved $1,000. I mean, now this is $1 million home. He saved $1,000 a month on his mortgage payment. But I mean, even if you save
all
$100
interest.
a month.
Wow. That's interest, basically.
Oh yeah. So it's huge. It's affecting the mortgage industry like never before, obviously. I mean, you talk about credit issues now. I mean, it's like get in line. We're talking about millions and millions of people in this country that need a bailout.
So the stigma is being reduced as well because everyone's having to deal with that.
Right.
Well, the stigma is being reduced, but as far as the rules to qualify for things, that hasn't changed, if anything.
Well, they've gotten more stricter now.
They've gotten stricter. You were talking about, when we were talking about in our previous segment about, before the commercial break, about credit being drying up. So they're raising the bar for people.
Right.
So what we're really talking about here, correct me if I'm wrong, is that whether it's a job, whether you're trying to qualify for a mortgage, I mean, it's now going into every aspect of your life.
Like I said, your credit is your credibility. It's your reputation now. It's kind of like you might as well stick it on your arm and carry it around with you. It's like, oh, look at you. You got a 480 or a 520. That's what I think about you.
And it's funny that you mentioned that. There are even commercials on TV now.
Yeah,
Have you seen that
the
one
dog.
with the dog?
Yeah.
You know, bad 470.
Yeah. Chewing up your couch and wrecking the house. And oh, my goodness. Yeah.
Throw me a bone.
Well, you know, and I can relate to that too. And I've talked to different people talking about people that are in business for themselves. A lot of people are self-employed nowadays. I mean, people are getting laid off their jobs or starting their own businesses, or a lot of companies are going 1099, contractors and so on and so forth. Well, when you're self-employed, see, the days of old, you could get a stated loan, and you can talk to your next guy about that. Those programs are gone. So now if you come in and say, well, you know, I can sort of say I make $70,000 a year and I don't really have any assets, those loan programs are gone. So then if you say, well, yeah, and I got a 500 credit score, a 600 credit score, you know, you're done. You're toast. You can't get a loan, period.
Well,
so
one more thing on what you're talking about, independent contractors and people that have small businesses, they rely on their credit with their suppliers too.
Right. Yeah, that's
so they're floating, you know, waiting for invoices to get paid so they can pay their creditors. And if they don't have the credit, not only to get a small business loan, but to get the inventory or whatever they use for their business, that's going to be huge as well.
Most of the banks, if you don't, you know, if you're not an established company, you're not going to get a loan based on the company's history on your Dun & Bradstreet number or whatever the case may be. They're going to say, we want a personal guarantor. So now you're going to sign that. So if anything goes wrong with the company, they're coming after you personally. Now that all that stuff's going to go on your credit report, and you're going to have to deal with it later.
Well, I'll tell you what, that brings up, Neil, you just opened up a great door, because this is something that we forgot to mention before. With all the changes that are going on, with all the corporate downsizing, what's happened in the last couple of years, companies are recognizing that they can reduce workforces, they can reduce costs as far as operating is concerned. And even though there's some experts that claim that there's some signs of recovery in the marketplace economically.
No, we haven't even seen the worst yet.
Well, before we even go there.
Let's not scare everyone.
Well,
no, here's the bottom line. As far as employment opportunities, they're coming by way of 1099 and independent contractors, which means, guess what? If you didn't view yourself as an entrepreneur, you're going to be one.
Yeah.
So credit is really going to come into play. So you can either be an accidental entrepreneur or an intentional entrepreneur. So what we're trying to encourage everyone to do here with the shift and the whole movement is to be proactive. So we're going from entitlement to empowerment. So we're here talking to Anthony Gaalaas about credit. You can reach Anthony, again, what is that number, 512?
522-5512.
And please contact Anthony if you have any questions, any concerns with your credit. By all means, give him a call. He can certainly spend some time with you on the telephone and educating you. It's time for another commercial break. We've been talking to credit expert Anthony Gaalaas, and you're listening to The Shift Economy.